the pessimism that existed globally for China seems to be cooling and seems to be eroding, not massively. And I'm not suggesting that people are jumping in and going back to overweight levels when it comes to their Chinese portfolios, but definitely starting to do some work, definitely starting to get bigger data, definitely starting to take the time to analyze some of these counters and some of these sectors. So overall, the pessimism seems to be eroding. Now, that's a factor in my humble opinion between two factors, right? Number one, rest of the world, and number two, China onshore. And I do think that as time continues to play out, and if we start to see the increased regeneration of the Chinese economy, then China still remains very, very attractive, and that definitely, from a historic point of view, you would feel that this would be something where you want to put some money at least.
Let's talk about, I suppose, the interrelationship of US money and China, because I'm even just looking at some of your, conviction long stock ideas, and it kind of reads like the composition of the K-Web. But I've got to ask you, because, we've talked about this many a time, and you know what, it was probably, I want to say back in February, March, and, we were talking about the role that Congressman Gallagher and that CCP committee is having. It was a little bit of a whisper kind of a comment from many market participants. A lot of people that weren't necessarily, sitting in hedge offices didn't know all too much about all of the machinations behind the scenes. Now we're seeing, Gallagher on our programming, at the very least, on the morning programming over stateside almost every other week. And it's becoming more known, the fact that, there's going to be a consistent push when it comes to investment in China moving forward against that. So the question that I really have to ask is, the hot money is always going to come in. It's always going to go after that upside. But if we were to lose any kind of substantial portion of the long-term or the LT insto money or whatever coming into China, where do you think that shortfall comes from? Because, Europe's in almost a basket case right now. There's obviously the Middle East that's got potential and the like. You wouldn't necessarily think a lot of money would come out of India anywhere else, especially not China. So where does that shortfall come from, if not from US capital markets?
Well, I agree with you, right? And that is the biggest, I guess, a consideration when you look at even medium to longer term, right? Where does the geopolitics end, and where does the line get drawn between new money coming in and that hot money chasing, and then even the short covering chasing, right? From my point of view, we would see that shortfall being covered regionally. I think a lot of the Asian markets and a lot of the Asian funds, especially on the sovereign side, still seem to think that China, from a medium to longer term view, is something that they would like to allocate to. And if you look at the bigger global asset allocators, China weighting, being sub 10% at the moment for most people is not a great deal for them to move back to, say, 10, 11, 12s, which would be a fundamental move onto the upside. Geopolitics is obviously leading that directive, which you've just mentioned, right? And I do feel that, again, with the upcoming meeting, potentially between Biden and Xi, and I'm not sure that the market's expecting that much to come out of it, purely more so that the fact that it's just the cooling measure that seems to be coming into play between the two powers will obviously give a great deal of optimism to the market. But overall, if the US continues with, and likely will do, especially leading into their presidential elections later next year, that rhetoric comes up. But I feel that the markets absorb that completely now. I don't really feel that there's that much downside that people will look into. And if that money is going to go into China, it's either already in, and really now we're thinking about an increased weighting marginally for able to pick up the upside. But you're right, there could be more measures coming out of the US and Europe to a degree, and Europeans, let's not forget that they equally have a view in mind when it comes to China and investment, especially direct investment. But I feel that outside of those sensitive sectors and those sensitive areas, then China is still attractive. We can't forget the consumer base, the size of the market that we're talking about. To not have any involvement in it, I feel would be truly damaging for those types of funds.